What's going on with Tesla? Significant cost hop looms. As an organization, Tesla, NASDAQ TSLA, has been at the focal point of financial backers' consideration for a long time. From one perspective, it addresses the world's most unmistakable EV producer, guided by one of the world's most perceived tycoons. Then again, many have evaluated that the firm is exaggerated and valued as a major tech organization and not a vehicle creator, with Musk himself guaranteeing the previous on something like one event. Regardless of the securities exchange feeling toward the EV creator, the numbers paint an unequivocal yet inquisitive picture. All through 2020, Tesla conveyed roughly 499 million vehicles and made $31.5 billion in income. In the initial 3 quarters of 2023, the organization conveyed more than 1.3 million vehicles and as of now accumulated more than $72 billion in income. Tesla's income per offer and benefits have correspondingly immeasurably expanded somewhere in the range of 2020 and 2023, 24 cents to $3.14 and $782 million to $11 billion, separately. In spite of the undeniable development, the cost of the EV producers' portions is the very same subsequent to representing the stock split at the hour of distribution as it was at the last part of 2020, floating close to $220. The striking disparity between Tesla's creation and income development somewhere in the range of 2020 and 2023 and the clear stagnation of its portion cost and market capitalization brought up the issue of whether the EV creator's stock is headed for a complex flood. Tragically, the fate of Tesla's stock remaining parts a profoundly disagreeable subject. In light of the information from TipRanks, money road examiners are themselves profoundly separated on how it will perform throughout the following year. The typical gauge shows a bullish opinion, however not even close to intelligent of the income and creation development, and costs the offers at $248.93. It is essential to note, notwithstanding, that the distinction between the most elevated and least gauges is exceptionally enormous and goes from $85 per offer to $380 per share. The bear case for Tesla. As referenced above, many have squabbled about the years that Tesla is seriously overrated, with Elon Musk himself sending its cost down subsequent to offering the viewpoint on X, then known as Twitter, in 2020. This position is additionally supported by another generally normal assessment that the organization ought not be seen as a tech organization yet rather as a vehicle fabricating Goliath, a contention that has apparently acquired legitimacy as of late as other, more conventional organizations have begun planning and creating electric vehicles. Should Tesla become more lined up with other vehicle organizations, its stock could reasonably live up to the most negative assumptions and fall into a reach between $10 like the Passage Engine Organization, NYSF, and $100 like BMW, ETR, BMW. Aside from the more extensive conversation on how Tesla ought to really be arranged, the organization has been confronting a few hardships all through 2023. There has been a general lull in the EV market, and the organization's Q3 profit report is broadly viewed as frustrating. A typical point raised by Tesla's naysayers is the many detailed apparently sudden ignitions of its vehicles. As per Tesla Fire, a site that tracks generally checked cases of Tesla vehicles bursting into flames, there have been in excess of 20 such episodes such a long ways in 2023. It is critical to note, in any case, that while the news covering such occasions affects Tesla's picture and its stock costs likewise, the EV producers' machines seem not to be fundamentally pretty much regular than with different makers. They just stand out as truly newsworthy all the more frequently because of the organization's noticeable quality. The bull case for Tesla. Regardless of the issues and concerns, areas of strength for Tesla bulls positively remains. Regardless of where the organization falls on the range between an innovation organization and a vehicle producer, the EV creator has consistently held a vital spot at the extreme front line of electric vehicle development. This is maybe best exemplified by the somewhat wide reception of Tesla Foundation by different players in the business. For instance, Clear Engines, NASDAQ, LCID, another EV creator, joined Tesla's North American Charging Standard, NASDAQ. Moreover, on November 13, the UK's EG gas station bunch declared it would secure Tesla's super quick chargers to support its own organization. Furthermore, Tesla as of late made a forward leap in the assembling system itself, prompting the news that its Berlin plant is probably going to start the creation of a new €25,000 model.